South African stocks hit 11-year high amid economic optimism and stimulus. The South African stock market is exhibiting a remarkable performance that hasn't been seen in over a decade, with the FTSE JSE Africa All Share Index clocking a robust 10% increase during the third quarter of this year. This rally has been characterized by achieving 13 record-breaking highs, pointing toward a sustained period of bullish behavior in the South African equity space. Key players like Naspers Limited, which holds significant exposure to the Chinese market, have seen their values escalate as the Beijing government implements economic stimuli to reinvigorate its economic landscape. These gains come amidst a broader emerging market rally, but South African stocks have notably outstripped their peers, indicating a unique investor confidence in the country's market prospects. Driving this confidence is a concoction of favorable domestic and international factors. Locally, the newly formed coalition government is credited with instilling optimism in the market as investors anticipate much-needed reforms to tackle pervasive issues such as energy and transport, which have long impeded economic growth in Africa's most industrialized economy. Banks, in particular, have benefited, mirroring the uplifted investor sentiment that has followed the ushering in of the Government of National Unity post-May elections. Another significant factor contributing to the growth of South African equities is the recent interest rate cut by the country's central bank, the first since 2020. This cut, announced on September 19th, aligns with the central bank's efforts to rein in inflation while concurrently fostering an environment conducive to growth, a balancing act that appears to be paying dividends in the eyes of investors. Worth noting is the considerable positivity emanating from institutional investors. According to a Bank of America Corp survey, there's a prevailing perception that South African equities offer rich value and growth potential, particularly among domestic economy-linked sectors like banking and retail. However, caution remains amongst this optimistic outlook, as some commentators reserve their judgment regarding China's economic health and its implications for Naspers and others with a stake in that market. Despite concerns of overvaluation signaled by the index's 14-day relative strength index, the sentiment continues to trend positively. Strategists from Goldman Sachs Group Inc. and others envisage further room for gains, particularly as preemptive rate cuts begin to impact the economy more significantly. The favorable tide has not lifted all boats, however. Sectors such as chemicals, platinum mining, and real estate have not enjoyed the same bullish outlook, indicating a selective assessment of value and potential within the broader market surge. In summary, the confluence of an accommodative monetary policy, government reforms, and external economic stimuli has created a particularly hospitable climate for the South African stock market, a condition that many analysts believe is set to support an extended period of growth for the nation's equities. Thank you for choosing Satori News.